Dina DiLorenzo is the president of Guggenheim Investments, $200 billion in total assets across fixed income, equity, and alt strategies. Great to see you, Dina.
Hey, Ramin, how are you?
I'm doing well. I mean, the question is, how are you? I mean, I assume your phone's been ringing off the hook the last few weeks.
I'm great, but I need to correct you on one thing.
Oh.
I have to take credit for the fact that we're not 200 billion in AUM. We're 350
oh my
in
gosh.
assets under supervision.
You have my soul. You have my deepest apologies. I made a mistake.
Never makes mistakes.
And Carol loves this because she loves to correct me on air, so thank you. All right, $300+ billion.
We want to take full credit for that.
How do you protect that $300 billion?
Maybe it went up just overnight. You had it right. It just boosted up.
Well, thank you for having me here.
Great
I know it's the Wednesday right after the conference, like last day of the conference. We're all a little raspy and winded. So I apologize if I refer to my notes today because it's been like meeting after meeting, which is fantastic because, you know, every year you come to Milken and you want to like meet with clients, prospects, colleagues, friends, the press. And this has been an extraordinary year, especially given the extent of the uncertainty, and people are just looking for clarity, conviction, and calmness from those who, you know, provide those services to them. So the secret is keep doing what we always do, remain disciplined to our investment process, and continue to educate the clients through our thought leadership and, you know, our commitment to them to help them work through their objectives, and if need be, refocus them into areas within their portfolio that give them that flexibility and while they balance their needs in the uncertain times.
So you're not really getting the sense that people are pulling back. It's more just maybe just looking for maybe a little bit more caution, a little bit more selectivity and things?
I think the durations have been extended, right? So we're relatively up for the year in flows. When January started, we really anticipated that when I was here at Milken, I'd be telling you that I was net positive significantly in inflows. But the good news is that we're not negative, right? So we are net positive, just not as much as we thought we'd be. But we do anticipate that by the end of the year, we're going to see some real increase to the action that clients are taking to put their money to work. I think right now, they're not pulling back, they're just being cautious, but they're being cautiously optimistic, which I think is really good.
Yeah, I feel like it's a term that we've heard a lot here at Milken, the cautious optimism. Dina, when it comes to private credit, right, we continue to see that market grow, we continue to see the number of participants in it grow. How do you guys differentiate yourself?
Okay, so the private credit word is, the private credit saying is really interesting. We've been doing it for over 2 decades. We believe our edge is that we are research-driven, due diligence-driven, quality over quantity. And one of the things that really genuinely concerns me about how there's been a huge growth in this space is for the new players that are entering it, I'm not sure they really understand the operational demands and the risk oversight that you need when you're actually providing those types of funds and those types of investments to clients. And I do think that it's like one thing that Guggenheim differentiates itself in that space is that we do offer a deep bench, not just from the research and the investment side of it, but also from the administration, valuation, liquidity profile, reporting, and the education, right? So our thought leadership is award-winning, and one of the things we truly focus on is really educating the advisors that we service when they are contemplating investing in interval funds, BDCs, and really understanding the differences between them and what that really will mean to their clients' end goals.
Well, when it comes to private credit, in terms of making that differentiation, you mentioned like making sure that you have, you know, the risks that are involved. What do you think? Because I feel like everybody has been all in on private credit for many years now as the industry has grown. What are the biggest risks that you kind of remind your team, like, this is what we've got to watch out for?
Issuer credit quality, right? Do they have their ability to meet their debt requirements and their covenants? You know, especially in these uncertain times, I think it's really important to focus on the credit quality. You know, anything, like, right now clients really want higher yield, but they also want stability and flexibility. So I think it's tremendously important to make sure that the credit quality is there and understanding their liquidity needs, right? And when they need that liquidity. And I think that will really help you maintain and retain your client relationships if you're being very transparent about exactly what they're buying and when they're going to be able to take money off the table.
There's been a lot of talk at this conference, too, about sort of the democratization of access to private assets, alternative assets, if you will. A lot of partnerships between some of the big institutional players as well as some of the alternative asset managers as well, in an effort to sort of, I guess, go a little bit further down the income spectrum in terms of attracting new clients. Is that going to sustain itself?
I think so.
Yeah.
I think that the mass affluent is educating themselves, especially with the application of AI now, which we're really proud of, how we're using AI in our working environment. I think that people have a tremendous opportunity now to get access to some really important information that allows them to invest their money more wisely, not just for their current situation, but for their generational planning and estate planning as well. And these are types of investments that do have long duration with high yield and income benefits if you're investing and allocating in the right way, you know, and diversified. And when I say diversified, it's not just diversifying with the types of issuers, but also the types of products, right? Because they all have different liquidity requirements.
All right, gonna leave it there. Listen, thank you so much. Always finding time for us.
Oh God, I want to spend more time with the two of you.
And she didn't even need her notes. Why did you bring notes?
I know.
Because you guys just make me feel so comfortable. It's great.
I had
Thank
notes
you.
too, so don't feel bad.
So good to see you, and I hope to see you again soon.
Thank you. Always.
All right.
Always love talking to somebody who manages more than $300 billion
Well, I don't do it
in assets. Overseas a team. Yes. There, I misspoke again. Let me just shut up now.
All right. Enjoy the rest of your week.
Thank you.
It's finally sunny in LA.
Finally, Dina DiLorenzo, president of Guggenheim Investments.